Dzień dobry Państwu.
Good morning, ladies and gentlemen. Let me welcome you at the presentation of the results of the PKO BP for the first quarter 2024. We have with us Szymon Midera, Vice President of the Management Board, managing the work of the Management Board, Piotr Mazur, Chief Risk Officer, and Krzysztof Dressler, CFO of the bank. Good morning, ladies and gentlemen. Let me move to the presentation. We started this year with very good results. The net profit after the first quarter is 2 billion zlotys, including some extra risks and extra legal risk provisions, 3.3 billion, meaning nearly 18% in return on equity. Without extra provisions, it's 25.6%. More importantly, these results have been achieved based on core income with an increase of nearly 21% year to year. The net interest margin has been maintained and increased. It's at 4.56% with an increase of 0.12 quarter to quarter. We had a very good cost to income ratio. It's extremely good, nearly 32%. Cost of risks very stable, below 50 BPs. Well, all those achievements have been recorded with the balance sheet total of more or less 500 billion, 12% of increase. Loans and deposits are quite positive, with more than 8% increase in loans, 276 billion, more than 16% of increase in deposits, 13 billion zlotys, with a new number of customers reaching the level of 12 million after the first quarter of this year. We also have a very good and stable capital situation. Tier 1, it's 17.41%, and we do hope that the loan volumes will increase in the upcoming period, and NPL is well managed at the level of 3.34%. The bank has been undergoing a deep digital transition period. Our customers have been increasingly relying on digital solutions, that we have more than 8 million active eco-applications with 6.5 million active customers using such applications, and super active ones amount to 5.5 million, and we have more or less 7 million logins every day and around 3 million transactions performed in this application. 2 million of tickets solved under the VASs monthly, and more than 220,000 customers use the deferred payment service in our application. Moreover, we've been streamlining our front and back office services, relying on the machine learning and artificial intelligence, optimization and robotization of processes. We've been increasingly using bots, completing conversations with our customers in eco-applications. At the same time, we've been adding automated solutions in our loan decision-making process, and our CRO will talk about it later. Now let me move on to the financial results. More specifically, net profit 2,044 billion zlotys. And let's just have a look to the right. Extraordinary items reported for some time. In core business, we have a number of possibilities to create some financial buffer to address black swans which are present on the Polish market. This net profit is the result of improvement in the result in core business, even in the light of legal risks. Return on equity 70.7%, but if you exclude one extraordinary item, we will have a return on equity of more than 25%. We have a sustained dynamic on business activities, 23.4% year to year, when there is a positive dynamic in terms of quarter-to-quarter progression. For any CFO, this is a dream situation because we become more and more profitable, and our customers, both retail and corporate ones, are more and more wealthy. Net interest income, this is the key driver for our profit and loss account. Net interest margin has improved. This is not a secret that any banks with a strong deposit capabilities are better fit to generate good interest income. Despite of that, we've been updating the corporate deposit customers as well. We have high interest rates and we have had the adjustments in the price policy, but we can still increase our margins quarter to quarter, not only year to year. So the margin on deposits were based on the margin from the third quarter of 2023, and this is a sustained trend for us. We can keep up with the promises made before. 13% of increase in loans, it's a very good result. As you know, the net margin profit is based on two elements, one based on loans and the other based on deposits. So this dynamic needs to be upheld, considering our appetite. We want to at least keep our market share. The loans stay in the same line as the deposit. We had record sales under safe loan in the fourth quarter of 2023. In the first quarter 2024, for mortgage loans, we have reported a slight increase, but there is a strong and positive dynamics year to year. Also, in terms of our investment funds, more than 35%. That's exceptional. Corporate segment. Here we are happy to know that extra money from the Recovery and Resilience Fund will be fed into the economy. This will be an extra source of resources to help our customers. And there are some promising elements in the recovery plan. 60% of funds have been earmarked for climate change and green transition. Here we have been doing a lot in order to provide the financing. And then 21% digitization. In this respect, please note that businesses have a huge challenge ahead. The number of machines per 1,000 of workers comparing to Germany is 4-to-1. So a lot needs to be done, and we need this money and this funding in order to leave behind a very human-intensive business development models. We are extremely happy with the two-digit dynamics on fees and commissions, both yearly and quarterly. As you know, there are some one-off elements, and not everything can be included in the quarterly reports, but we can see it in the yearly reports. And we see that the income from fees and commissions is two-digit. We know that interest rates will not be raised all the time and forever, and that is why we know that we need to look for other drivers on the side of fees and commissions in order to keep and maintain our profitability. Cost efficiency, it's also impressive. We are a huge banking institution. I remember a situation when we discussed 60%, 65%. We know that we are on the increasing trend because the inflation rate is high, but if you compare that to the income from the core business, you could see that this is manageable. And there are some other items and events. Just look at the regulatory costs compared to what we have in the fourth quarter and now. But there is an improvement in the context of inflation, and we'll do our best to keep the costs tight. And let me now give the floor to Piotr.
Good morning. Cost of risks under control. We are very happy that we still see positive trend. Quarter 4, we created additional provisions up to 200 million zlotys due to the change in the model as regards mortgages, cash, and we also created extra provisions for some branches in corporations, and the confirmation of that is the good structure of our portfolio. We still see a drop in NPL portfolio, and another thing which confirms the quality is a high level of provisions. And this is the next quarter, which shows its stability, and we see that it's a very high level, and we are very happy that we are able to still see the increases in market shares in cash loans with a stable and one of the lowest risk levels in the sector. If we see new populations coming to the bank, they are of better quality as compared to those that we have in our book. Now, CHF settlements, we already have 38,000 settlements concluded. What is important, the conversion of applications for settlements is still high, which shows that our offering for the customers is still active, is still attractive, and we see also a slight increase in the number of the settlements and requests for mediation concluded, and a slight drop in lawsuits. Our goal is, so that maybe not in the second but in the third quarter, to improve the trend, so to have more and more settlements and fewer court cases. So another slide that I'd like to dwell on a bit longer, because I would like to preempt any questions concerning the quality of credit portfolio issues, whether we still presume that we would have maintained such good quality. So I'd like to show you risk management, some details. And last year we carried out some technological transformation. So we had a new platform for risk, a new technological platform, a new engine for risk. What does it give to us? Precious time. Once in the past, we introduced a new model, and it cost us several months to do that. Now we are doing it within 1 week, and we make several dozen or so of such changes in a year. And thanks is that we have increase in sales or mitigation of risk. And we can do it much faster now. The second issue is now moving the analytics into the cloud. So first of all, this gives us good tools that we didn't have earlier, which were not present on on-prem systems. The second important issue is the calculating power. PKO BP has the biggest data in the whole banking sector, and at the moment we are able now to use the data fully, and you may see it in these slides. So at the moment we have 83% of decisions on cash and taken by machine learner state-of-the-art machines, which gave us a dozen or so increase in the effectiveness of the model. As for SMEs, we have 6-7%, and in mortgage, 30%. So this is good news, and it shows that we still have space for development. We are doing it not only in the retail banking, but also in the corporate sector. We use big data to analyze large corporations, but the biggest potential we see still in deposits. There we do have really large funds, and I think AI may help us greatly analyze the portfolio or deposits, the stability of the portfolio, and to use it as our business. And finally, I'd like to tell you that one element is missing. Sometime in the past, we made some analysis of which one showed that good customers cooperate with good customers. So if the profile of the customer or client is good, then the transactions are really done with good clients. So the same is for banking sector. If we have good advisors, they are able to attract clients with a good risk profile. So this is the case for PKO. So we have very much advanced technologies for risk assessment, but this is just part of the whole process. We need very good people in business, good sales personnel who are able to acquire clients of a low risk for our bank. And it's going on. We see it in the cash credits and loans, and we'd like to thank you for that wholeheartedly. And the last slide, a solid capital position, very good financial results, very good risk management is translated into the capital position. We have big capital surpluses, as Szymon has already mentioned, and that gives us a good outlook for the future. Thank you so much. Thank you very much, gentlemen. So to sum up, this has been a very good quarter with a net profit of 2.2 billion. Without any provisions for the legal risk, it would be 3.3. And we have the continuation of dynamic core income growth. This is of huge importance for us, and volumes are growing as we expected. In the context of loans and deposits, we have a very strong capital situation, and cost of risk and NPL are under control. So thank you so much, and please ask us questions. So, Santander Bank, Kamil Stracki. So great results, congratulations. Well, that's a very good beginning. I have a general question about the strategy, and because there have been some comments on the press and ambitions for growth. So part of bank managers want to increase profitability, and they don't have such ambitions for growth. So why do you have such ambitions? That's one question. And the other, as you mentioned, there are various, I guess, traps that all the banks can do something to have better sales. So this is appetite for risk, the price, and which tools would you use to achieve faster growth? Well, we are starting the process of preparing a new strategy. It would be ready at least that kind of framework strategy would be ready in autumn. And indeed, we would like to increase our market shares in a profitable manner without reducing profitability. The bank shows it in the annexes to this presentation. You have the summary of our market shares in the last quarter. They are growing. So after these 3 months, not even 3 months after my presence here and making diagnosis, I see a really huge potential for market shares to grow. Looking from the perspective of the 10 or 15 years, we are in the same place in some business lines, but the bank has all possible potential and capital to increase market shares, and we show it in the cash loans in the last month and also in the mortgage loans. So as for the drivers for the results and for the sales, let me just mention a very simple line. That is how much we weigh in the retail and in corporate sector, where there's natural room for banks' growth. And in that respect, we would like to underline our activity like that. In addition to price, there's also the issue of the very complicated issue here. So especially as regards energy transition, it's much more complicated than in plain vanilla financing. So I see that here volumes would be growing in financial institutions that would be able to go beyond a typical way of funding. So they would be able to kind of have this issue under control more broadly, and we would be doing our best to achieve that. As for the appetite for risk, as you mentioned, I would respond to it like that. So the systems are like that today, that we want to earn at least 140 per transaction. So there is no much space to grow more, but we still have space for automation, for simplifying, streamlining processes. We would like to be very active here in SMEs in that respect, and we see great potential there. And as for the retail, ladies and gentlemen, we have the basis of 12 million customers, clients. So we see that a large part of them are being self-financed in cash loans outside of our bank, and we want to also reach to them. So we had even more than 50% of sales, and we do hope we would have the same percentage as regards new sales in the context of launching a new product. So we have really a huge potential for these market shares to increase, at the same time keeping our market shares. Thank you very much for the answer. I have also a question about CHF loans and provisions. They have a gigantic influence on profits reported by PKO BP. So what about the resolution of the Supreme Court? Does it change anything? And how long would you have to live with such reserves? So Piotr, the floor is yours. Yes, the resolution does not change significantly the issue. Of course, we are still waiting for the justification, but it did not impact the value of our provisions. The fact whether we create additional provision depends on customers. If they select a simpler, faster system of our settlements, we would not have to create such provisions. But if she choose quartz way, then we would have extra costs, and unfortunately these provisions would be going up. It all depends on the decisions of our customers. Although the analysts emphasize that we already achieved the level of outstanding balance. So we have this coverage almost 100%, 99%. So the question is in which direction the jurisprudence will go. We would not say anything definite about it now, but we do recognize the step made as the stage of policy closing important frank policy kind of weighing, but there will be various calibrations at various levels because they are not personal decisions, but they are based on the models. So we are carefully observing what's going on in different resolutions, the jurisprudence. And what we should note, as Piotr mentioned, we see the return. Maybe it's not yet the trend, but we see that the number of settlements started to grow. Maybe the customers are tired of these long processes and uncertain effect, and our offering is good. So we do provisioning, taking into account the situation, which is the effect of court's decision. Any other decision in this context would be positive.
Brokerage House City Handlowy. I have a question about the growth perspectives for now, more than for the future. What's the demand for the corporate loans? Is there any sign of improvement? The tendency is on a positive side. Do you believe that we will feel the fruits of the recovery fund or the results of the recovery fund in terms of the increase in the demand for the corporate loans? We've had some slowdown signs, and there's many, at least some reasons behind it. First, the number of players has been reduced, and this in a way impacted the appetite for corporate loans. So on the side of the staffing of those players, well, with the changes in the staffing levels among those players, we may have some positive results. We are now heavily preparing for the launch of the Recovery and Resilience Fund. That will be a key factor, and with the deadline in mid-2026. But in the short term, I cannot give you any specific answers for to your questions and regarding the demand for corporate loans. Our chief analyst has devised some scenarios regarding the portfolio of corporate loans. We will do our best to strengthen our market share and look for this potential. In two key pillars, digitization and green transitions are set under the Recovery and Resilience Fund. This is necessary to keep competitiveness on the international market, and then the decarbonization is a requirement in any global supply chain, and as Polish businesses are piece and parcel of those supply chains, they need to undergo this green transition and meet the milestones under the plan. We'll try to strengthen this part of our business. I think this is all. There are no further questions from investors in the room. Let us move to the Q&A session online. I see a number of questions regarding the dividend. These questions focus on the deadlines. So when can we expect any recommendations on that topic? And then there is another set of questions. Is there a space to pay a dividend on a profit, undistributed profit from the previous years? Well, maybe I will take this question. In the Polish Financial Supervision Authority has issued a recommendation where the undivided profit from previous years requires a separate decision. But the dividend payment limit has been defined at 75% of the profit from previous periods. We've paid the dividend at the beginning of this year, and right now we are at the level of the total net profit of the bank, not the group, but the bank. And that should be, these figures should be taken into account. But let me just repeat what Szymon has just said in the introductory remarks. The bank intends to use the extra capital and build an extra capital by strengthening the volumes and margins. I think that we need some adjustments and adaptations in terms of our profitability profile. Do not forget that we have some challenges ahead. Capital adequacy, long-term liquidity, so a number of requirements that need to be addressed by the bank thanks to its presence in the wholesale market and by strengthening the common equity tier 1 ratio. Let me look at the next question, the mortgage loan sales in the first quarter. So what's the share of subsidized loans? Is there any number or set of applications to be processed still in the second quarter? 4.6 billion out of 8 billion mortgage loans sold in the first quarter, and there are still some applications pending in the second quarter. Next, this is about the cash loans. Have you changed the template? Are you going to change the templates of the cash loan agreements in case the legal risks materialize? Well, we have analyzed the process, including in terms of legal risks, and we believe that it complies with regulatory requirement. But we wanted to be cautious, and we made some decisions in order to be 100% sure that there are no legal risks. Next question. You had a higher number of settlements since Q3 2023. You mentioned that. Are you going to make this offer even more attractive? Is it going to impact costs? We are looking economy-wise on that. Settlements usually entail some costs, administrative costs, first of all. But at the same time, any settlement impacts the provisions established, and next the provisions are reversed. So settlement is always an attractive solution for the bank. And actually, we need to cover costs, and we are not the beneficiary. The beneficiaries are outside. Along with the bank, there are other players involved in the settlement process. So it will be good for us to make the whole process easier and to reduce costs. That is why we choose institutionalized, amicable solutions. But this is just one of the aspects. The economic aspect is important indeed. However, don't forget the costs that need to be paid, and we are not a beneficiary here. So because of that, we are ready to make the settlement process more attractive. In other words, we want to change the message our staff relay to our customers, together with the information on emotional costs and administrative costs as well.
We have some last questions concerning the long-term financing index and its impact on the bank. So we, as the financial institutions, are in the avant-garde of the institutions in this part of Europe. That is why we would be kind of trend setters for instruments strengthening the capital base and other instruments necessary in a regulatory basis to cope with the challenge of liquidity. So here we are still in contact on a permanent basis with the Polish financial supervision authority. So we are also applying for some changes or modifications in calculating this particular index. But as professionals, we are in contact also with potential offerers and institutions, financial institutions, and which would be able to buy these instruments that we are now developing for this index. So we are very active on all fronts, regardless of the level which will be necessary to be supplemented. And well, this is not the only thing which is required for our wholesale, let's say, presence on the market. We will do it professionally. That's how we understand our role for the whole sector, because we are the biggest financial institution. While showing the bank as the benchmark, we also kind of set the path, set the trend for all institutions that play the same role as we do, that they are banks. Okay, so this is the end of all the questions for today. Thank you so much, and see you next quarter. Thank you so much.